this is the other part because we talk about the things that credit can affect, right? Obviously your score, but it could affect loans and sometimes employment.
Yeah.
But it also could affect relationships. This is important, right? Because you said you need to have maybe 3 to 4 items on your credit report. And some people, when they're in relationships, we've seen, I'm going to get a car, I didn't get approved. Can you co-sign?
I love this. Y'all asking a good question. This is why,
We've been known to do that a few times. So talk about that. Co-signing could be
Let's
very
talk
detrimental.
about it. So one of the things that I do in my day-to-day is I'm a credit specialist specializing in mortgage scoring, right? So I deal with a lot of people who can't seem to close on their home, who need a few more points to obtain a home loan. Now, this is one of the things that I see so much, and we need to change it. So when it comes to married couples, spouses, make sure that the accounts are evenly distributed, right? So make sure that one spouse does not have is not the primary account owner of all of the accounts, and then the other spouse, usually like the stay-at-home spouse, is just co-signed on all of the accounts. There is something within the Credit Card Act of 2009 that says on every credit card application, legally, you can use what's called household income. So if you have a spouse that maybe does not make a lot of money or, stays at home, as opposed to them just being a co-signer and authorized user on all of spouses' one accounts, they can apply using the income. They can apply using their spouse's income. So make sure that they still have credit cards, not home loans, but loans and installments in their name as owner, because when you only have co-signed accounts, authorized user accounts, then you're never going to unleash your true borrowing power because it's based on someone else, regardless of who it is. So make sure, yes, I'm glad you asked that question because that happens so often. Like it'll be one person has great credit and then one person has subpar credit because they haven't built any credit.
Yeah, and that's if you're married. If
it
was your girlfriend, your boyfriend, and you broke up, good luck.
Oh, well, yeah. To speak on that, co-signing, no. I won't co-sign. I'm not co-signing for nobody because that affects you. Like if you co-sign for someone, and you can have amazing credit, if they choose to not pay it or run up your card, you are responsible for that. Yeah. When it comes to co-signing, when it comes to authorized users, they don't have any legal binding to that account. So they can run it up, they can spend every dollar, and it still is going to be your fault. When you co-sign for someone, that if that account goes derogatory, it's going to affect both persons' credit report. And you can't do nothing about it.
So what about credit consolidation? Is that always the most beneficial way to kind of manage multiple?
No, it's not. That chips away at your credit age drastically. So, now, it like when it comes to like student loans and things of that nature, sometimes that it's worth it, right? But when it comes to just consolidating your everyday credit cards, I don't always recommend it unless like you're just trying to prevent bankruptcy or something like major like that. But consolidation, I'm not the biggest fan of, just because it doesn't really aid to you improving your borrowing power.
So if people have bad credit and they're trying to improve their credit, what's the steps to actually go from, having issues and bad credit to having better credit?
Yes. The good thing about having bad credit is you have a lot of points that you can obtain. Like the lower your credit score is, the more points you can grab, right? So my favorite thing when helping someone with their credit is when they do have a low credit score, because it's so easy to get those points. You just have to understand that obtaining those points will not come from just repairing your credit or disputing your credit report. It's going to come from building credit. That is where the points are released from, right? So making sure if you have bad credit, if you have collections, charge-offs, whatever, there is nothing that will help you other than building credit, making sure that you have those 4 accounts, 2 credit cards, 2 installments, 1 short-term, 1 long-term, making sure you do not pay off that installment early, the short-term installment specifically, because you want to build credit, right? Also, if you do have collections, challenging those, right? If they get removed, great. But if they do not get removed, you still can have good credit with collections, because the older a collection gets, the less impact that it has on your score. The more credit that you've established since the collection will help you sort of undo bad credit, right? I think it was one account that I could not get removed. And again, that did not stop me from getting credit cards or buying a home and things of that nature, because I had established credit that spoke to my financial habits, my current financial habits, more than those old collections, right? But yeah, so making sure you're building credit. That's what people will say, I have bad credit, so I'm just not going to touch my credit for 7 years. It's the worst thing you can do, because that's 7 years of wasted time where you can build credit. You can come back from collections. I've never, and I have helped thousands. I've looked at thousands of credit reports. I have never seen a credit report that is irreparable, ever. And I didn't seen 300 credit scores. Mm-hmm. That's the lowest credit score you can get. The lowest score that I've seen, FICO score, was a 311. The lowest, right?
It goes lower than 350.
No, so the lowest score you can get is 300.
Oh, 300.
Mm-hmm.
Oh, okay.
Yeah, the lowest score you can get is 300. The highest you can get is 850. I've seen a 311 credit score.
Damn.
People think that because they have bad credit, they're just doomed for the next 7 years. That's not true. Mm-hmm. Build credit and you will get credit points. When you add your credit card in the first month that you get a credit card, please, everybody who's watching this, if this is your first credit card, do not allow that first month to be wasted on reporting a $0 utilization. Because a lot of people get their credit cards and they're scared to use it, so they'll just keep it in their pocket or keep it in their wallet. When you activate that card, you typically are going to be mid-cycle, depending on how long your bank took to mail it to you. Go get some gas. Go buy some chips. Go do something so that you have at least 1 to 3% reporting that first time. The reason why it's important the first time is because when your credit card hits your credit report for the first time, you open yourself up to utilization. Because if you don't have any credit cards, you're not getting a single point out of the 165 points that are allotted for you credit utilization. So when you first get your credit card, make sure that you report a very small balance. So the second that credit card hits your credit report, which is usually like 60 days after you get it, you should see a large increase in your credit score.
Yeah, go buy you a pair of sneakers, y'all. So